Ladies and gentlemen, it's 5 o'clock here where I am in the Netherlands. So just about time to start with the first Fireside chat, isn't it? And we will have two heavy hitters talk about sustainable growth in emerging markets. I will have with me Peter Cashion. He's the CIO and the global head of climate finance with the Financial Institutions Group at the IFC. He's heading a team that's deploying as much as $1.5 billion a year, ladies and gentlemen, into emerging markets financial sectors. And they're also providing advisory services to regulators and financial institutions alike to deliver on climate objectives. Peter brings some 25 years of experience both in the field and in Washington at the IFC. We'll be curious to hear from him. In discussion with Ruth Horowitz, she's the head of the IFC Asset Management Company. In fact, she's joined the IFC Asset Management Company back in 2009 when it was established. She's been a vice president of the Equity Mobilization Division before, and before that had been with Lehman Brothers for about 20 years. As I've promised, two heavy hitters having a discussion amongst themselves. Here you go. Enjoy.
Hopefully next year we'll be all in person. Off the discussion and just turn it over to Ruth and ask her to comment on IFC and AMC's experience as an impact investor in emerging markets, both historically and what initiatives we have underway looking to the future.
Great, thanks, Peter. I'm always astounded after those introductions that I don't roll up in a wheelchair or something like that. Also, they scare me sometimes. But I want to go back and highlight that this July will be IFC's 65th anniversary of its creation. And IFC was created to focus and develop the private sector because of the understanding that the private sector and investment in the private sector is absolutely key to international development. And our focus has remained on international private sector development from that time. And one element that has remained constant in all of that is that we invest not only just to go into a private sector company because it's nice, but we invest for impact. And everything we're doing, we do from that perspective. In some ways, we can maybe claim that we're the first impact investor. Not a competition. We don't really want to go there, but it's something that we've been doing very, very consistently. And it's not only something we started out doing, it's something we continue to do. So when we think about ESG investing, IFC was on the forefront of that with the launch of the Equator Principles in 2003, which provided financial institutions with a framework to determine, assess, and manage environmental and social risk in project finance transactions. More recently, 2 years ago, we launched the Operating Principles for Impact Management that many people on this conference are familiar with. And these principles provide a framework for investors to ensure that impact considerations are purposefully integrated throughout the investment cycle. It's our hope that these principles can bring greater discipline and transparency to the impact investing space. The great news is we have about 120 signatories to date from 30 countries, representing over 350 billion of assets covered. And these signatories comprise the full spectrum of asset owners, asset allocators, and other types of investors. And we all know that impact investing has become one of the big trends in global capital markets these days. And there are estimates all over the place, but there could be an estimate. One of the estimates I read more recently is a $2 trillion focus on impact, and hence the need for conferences like this one. And we're really excited to see this dramatic and rapid change in the way asset managers and owners talk about impact as part of their kind of baseline work that they're doing, as opposed to something special. And as mentioned in the intro, I head equity mobilization for IFC, which is the asset management company. Why do we even have this? And the simple reason why is because there are so many opportunities out there that there's no one organization or even one type of organization that can do this without the help of others. And it's really important that both the private, the public, and the multilateral sector all work together to unlock the opportunities here that we can do for investing. So thanks, Peter, and give it back to you.
Great, thank you, Ruth. One thing that struck me in the video was how much there was a lot of airtime and profile to climate finance and the environment. And, I'm heading up the climate finance group within financial institutions. So it's something I'm really passionate about. So I think I'll just share a few thoughts that we see and perspectives we have on the industry. First, there's a huge opportunity in the area of climate finance as we transition to a net zero economy. In fact, we believe that we're on the verge of the largest economic revolution in history. So, those aren't small words, but really where we are in 2021 and the objectives for 2030, we believe that this is the case. And it's going to impact everything we do, how we consume, how we travel, how we source our energy. And so it will create this opportunity and, of course, serious risks as well, both on the physical side and the transition risk side. So we're really working and trying to educate our financial institutions on both the opportunity and the risks. We're at really quite an early stage of the climate life cycle. But it's one that must accelerate really quickly given where we are in the targets for 2030. So, sometimes I think about comparing the climate life cycle to the technology industry life cycle, and which is probably 30 years ahead of us. So I feel like we're in the 1992 of the climate finance industry life cycle. So what do I mean by that? So transport yourself back to 1992. You're looking at companies like Cisco Systems, Microsoft, and wondering if those are good investments. Fast forward to today, we're looking at NEO, Next Energy, Tesla, wondering if these will be good investments. And clearly we know the answer to some of that already. So we're really on the precipice of something really big that's going to have huge opportunities in growth. Of course, most recently, we've been confronted with a black swan event in the form of COVID. And as harmful as COVID has been, it's actually given us a unique opportunity to build back better and deploy all the trillions of dollars that have been put forth as stimulus money to this green rebuild. So at the IFC recently, we published a report called the Green Reboot Report. And in this report, we identified 10 trillion of investment opportunities in emerging markets across 10 different sectors, broadly speaking under cities, infrastructure, and the possibility to transition polluting industries to cleaner outcomes. So despite the damage of COVID, we really believe there's a historic opportunity to rebuild better. And we really want to push and promote emerging markets as they shift from a short-term relief to long-term recovery, that they really prioritize decarbonization and low carbon pathways to really create a more resilient and just economies as we move forward. So, I hinted, Ruth, as I was speaking about the role of technology and clean tech. And, that will really be core as we transition to a green economy. So I'd be interested in your thoughts on this topic and how AMC has been involved in the past and the opportunity set going forward.
Great, thanks, Peter. I want to start by stating that I agree with you that the opportunity kind of presented by the crisis of COVID really gives everybody a chance to build back better and to think again about how to deploy capital in ways that are both supportive of the companies and the economies, but I think also climate employees and everything else along those lines. So thinking about things holistically. And I know when we talk about clean tech, anybody who's got a little bit of age on them is just going to immediately think back to 10, 15 years ago when there were billions invested in everything that was going to replace fossil fuel, which effectively meant solar or anything that replicated solar. And maybe even the first generation of batteries. And then there was just an entire crash, and probably more than half of the capital in that market was lost at that time. So why is this time different? And why do we think that clean tech investing and its opportunities now present a different kind of opportunity? And I think one is a very simple baseline. It's just the way we talk about it. at the time, 15 years ago, it was a novelty. It was, yes, we have to get there, but this is a novelty to us. So if you extend it, if you take Peter's analogy of technology in 1992 or 93, this isn't Cisco, this is eToys, or was eToys, or the equivalent of everything going online without having to worry about a business model. Now, as we think about it, everybody understands that climate matters, clean tech matters, and that, by the way, clean tech has a definition that is extremely broad, right? It doesn't only mean replacing fossil fuels. It can mean technology. It can mean low carbon cement. It can mean plant-based meat. It means lots of different things. So the opportunity really spans, it's not just venture capital anymore. It is actually everything from venture capital to later stage venture capital to growth equity investing. So, and it's become ingrained as a way of thinking for lots of people as they invest. So we think the opportunity there is a lot more attractive. And I'll talk about some of the things we've done in a little bit when we talk about some of the other questions.
Okay, super. Yeah, no, I think that was an interesting reflection that money that came in at the beginning, in some cases, may have been ahead of its time. We had some home runs and we had some not home runs. And I think the other cool thing is that the technology transfer can be practically instantaneous to emerging markets. So, that can happen seamlessly. And we have several examples of that. Maybe I'll just say, I know we're maybe running on time here a little. I'll just say a few words about our climate finance and IFC. So it's really core to our business. Over 30% of our investments in IFC now are supporting greenhouse gas reductions and adaptation. So it's a core part of our business. In FIG, we do over $2 billion a year of direct investment. And we really try to take a strategic approach in terms of creating a market, working with regulators, working with banks to show them the opportunity and how to access it, and also provide the funding, because that's core. But we've also, given the needs and demands over this next decade, we estimate there's 23 trillion overall emerging market financing. And what we see is that banks cannot do this on their own in terms of financing this need. Capital markets will really be key. So a core part of our strategy is to develop capital markets. So be it green bonds, transition bonds, we have a blue bond coming to market soon. And we are very active as an issuer. We've done over 10 billion in green bond issuances as IFC. On the equity side, we've also been proactive in terms of taking an approach about moving away from coal financing, as many financial institutions have done. We recently launched our green equity approach, which basically calls on our equity investees to reduce their exposure in coal to zero by 2030. So yeah, that's a quick rundown of what's happening in our neck of the woods. So Ruth, maybe a last question to you. So what do you see at the AMC in terms of opportunities, particularly on the equity side and with AMC funds? And where are you guys looking?
Thanks, Peter. As hopefully people know, AMC is a third-party asset management business where we raise capital from other asset managers to invest in the emerging markets and growth equity stories alongside IFC. We've had a couple of very interesting opportunities. And one thing I should say is we have a climate lens on everything we do. It's a question of how closely that climate lens is then focused. So in 2012, we raised a fund of funds called the Catalyst Fund, which was focused on climate. And we really saw an opportunity at that point in time for the emerging markets for things to change because of resource scarcity, vulnerability to imported energy, pressure on fossil fuel subsidies, and increasing awareness of the adverse climate impacts that could have impact on regulatory environments and better enforcement of existing regulations in emerging markets. Why did we do it through a fund of funds at that time? Very simple: diversification and the opportunity to have the full exposure to the suite of what does climate mitigation mean. We actually made 15 investments in this fund across all types of different definitions. We provided our investors with diversification by country, by industry, by even stage of investment. And I'd like to just highlight one investment that was made in that fund. Company's now called Full Truck Alliance, or FTA. It's currently the world's largest e-logistics marketplace. It's based in China, and it connects over 10 million truck drivers and 6 million SME shippers in China. And you say, why is this a climate investment? I mean, great, can help the emerging markets, does a lot of stuff. Well, in China, when you have a truck and you own a single truck, or you're an SME trying to ship your goods back and forth, basically truck drivers drive around looking for that information. There are a couple of pickup points. The SMEs have to get their stuff, their product to that place. This is an app. And the creation of this app has saved an enormous amount of fuel emissions. We think the estimate is around 14 billion just for this one company. And oh, by the way, we've partially exited this investment and we have a really nice return. So this investment really demonstrates that climate investing is technology investing, it's small business investing, and it can be very profitable. I'd just like to highlight one other quick investment that we've made also in China related to a company called Alba. It's waste management. Again, not your typical expectation. Really, this lets a company grow in a new location where it hasn't worked before and lets new technology get to China. Exactly, Peter, what you're saying on the technology transfer, and not normally a place you would think new technology needs to go to. So another opportunity that we're really excited about across our portfolio.
That's great. I love the story on FTA and how it merges like really digital technology, climate, and finance. It has the full package. And yeah, as you said, it's not immediately obvious, but then when you see the alternative, the savings are really significant. So maybe just a couple closing remarks on my side. I mean, I think if the message takeaways that I would give is that there's a huge climate opportunity, but there's also this urgency. And I guess we would also urge, particularly asset owners, managers, that it's critical to be ahead of the curve, because both on the opportunity side, those are coming, but on the regulatory side, there's going to be much activity from regulators and demanding that asset owners, managers become more aware, report under TCFD, SASB, et cetera. So you don't want to be reactive, you already want to be ahead of the curve. And of course, we would love to connect with any of you on the report or anything that we've discussed here today. Ruth, over to you.
Yeah, and thanks, Peter. I just want to emphasize again, in terms of the opportunity is now, I think that opportunity is even more enhanced by the fact that we're coming out of the COVID crisis, and the opportunity to get in and have the ability to grow with companies as they recover, as they take it, as they're really able to reset themselves for the new markets is really important, and a way to have impact across many dimensions in addition to climate. So thank you all.
Good. Thank you. Thank you so much, Peter and Ruth, for having this fireside chat. While I appreciate in your place, it's not really fireside time yet. And I reckon there may have been a problem with my mic in the very beginning that may have disturbed you, for which I apologize. So thank you for having had this discussion, which I've perceived as highly complimentary and really very, very informative. We would love to go on a little bit longer, but I'm afraid we have a very packed agenda and we may have to go to the next item. So thank you very much, ladies and gentlemen. This was Peter Cashion, CIO and Global Head of Climate Finance at the IFC, and Ruth Horowitz, Head of the IFC Asset Management Company. Thank you both.